So how does Donald Trump pay zero in taxes, and how can you do the same? Basically, how can you have the Trump tax plan? My name is Merrill Taylor. I am a CPA. I've been doing taxes for over 20 years. We specialize in working with business owners and real estate professionals on helping them save money on taxes. We've helped people save anywhere from $10,000 per year up to hundreds of thousands of dollars per year using niche tax strategies. So today, we'll talk about Trump and kind of what he does. And sometimes I'll get clients that will come in and say, I want the Trump tax plan. I want to pay zero taxes like Trump. And so I have to then explain to them what I'm going to explain to you now, how Trump pays zero taxes and how potentially that could apply to you as well. Now, to get into this, we have to recognize that there are special sections of the tax code that give benefits to certain groups of people that don't apply to other groups of people. That's just the way the tax code was written. It's the way it goes, and so we'll get into that. Specifically, is what we're talking about here is a special code that's called a real estate professional. The real estate professional, in my opinion, is the most advantageous designation that you can get when it comes to taxes, because it allows you to take losses and deductions that no one else can take on their returns. But there are big limitations on who can qualify for this status. So we're going to get into that here shortly. So here's the idea. Is that, let's say that you go out and you buy a property. Let's say you go out and buy a rental property. It could be residential rental, it could be commercial rental, it could be a home in the country, it could be a home in an urban area, or a rural area, urban. It could be a office building, it could be just a general office building, it could be a huge high-rise, it doesn't matter. They're all kind of treated the same when it comes to the taxes and the way that taxes work. So let's say that you buy a rental property, commercial or residential, for $1 million during the year. Let's first say that you make $1 million and you're looking for a way to offset your $1 million of income. So you think, I know, I'll go out and buy a rental property for $1 million, I'll deduct it and save money on taxes. Well, that may or may not work. It depends on what your status is. And it works if you are, potentially works, if you are a real estate professional. So a real estate professional is someone who spends 50% or more doing what's called real property trades or businesses. So this would include things like real estate development, construction, property management, being a broker, things of that nature would qualify for a real estate professional. So I am a CPA. I am an accountant. I spend, let's say, 50 hours a week. It's usually more than that. Let's say it's 50 hours a week doing accounting type work. In order for me to qualify as being a real estate professional, I have to spend more than 50 hours a week doing real estate status, because my accounting work is not related to real estate professional. Even if I work mainly or solely with real estate people, that doesn't mean that doesn't automatically qualify me for real estate professional status. I have to be doing real estate development or something along those lines, at least more than what I'm doing professionally. So professionally, I'm a CPA, I do that 50 hours a week, then that means I would have to spend 51 hours a week on top of that. So now I'm working 101 hours a week, 50 hours a week as a CPA, 51 hours a week as a real estate professional. Now I get real estate professional status. That's why it's unattainable for people that generally have a full-time job that's outside of real estate. Let's say I had a part-time job and I only work 20 hours a week as a CPA. Now I only have to work 21 hours a week doing real estate trades or businesses or business of that nature. Well, now it's a little easier to qualify. Or better yet, let's say I have a spouse, my spouse happens to work for me. Well, let's say she didn't work for me. Now we have her become a real estate professional and she spends all of her time doing real estate professional status. That could get us there. There are some more rules that come with that. There's a 750-hour rule. So let's say that, let's take my wife. Let's say that she doesn't work for me. She doesn't, work, that she spends all of her time doing real estate type things. Well, she still has to meet a 750-hour rule for the year. During the year, she has to spend 750 hours during the year, and she has to be active. She has to actively participate, which means that she must spend at least 500 plus hours a year in that specific activity, or spend at least 100 hours in a specific activity and do that more than anyone else. But if she's working, and then so and I should break it down because I said 750 and then 500 and then 100, so we're kind of throwing a lot of things around. But that's like activity by activity basis. So let's say I owned 5 rental properties, or my wife owned 5 rental properties. Each of those properties is considered its own activity. So in order for her to be active in each of those, she would have to spend at least 100 hours or more and be doing more than anyone else in those to qualify. There's really specific rules for material participation. We're not going to get into those in here. You could look those up online. But basically what we're driving at here is that you have to spend more than 50% of your time doing real estate trades or business, and that must be 750 hours or more during the year. And then when you get into your own specific activities, the details of those, there's more requirements there. So that's what makes it really tricky. There are what's called aggregation rules, where you can aggregate things together and make that happen. So let's say that you're not a real estate professional. What can you actually write off when it comes to real estate? Well, the answer is not much, because real estate by its nature is passive. So if you generate, say, a $100,000 passive loss from real estate, or loss from real estate, that's passive and can only offset passive income. It can't offset W-2 income or other types of business income. However, if you're a real estate professional, that can offset those types of incomes. So let's go back to Donald Trump. Why can Donald Trump pay $0 in taxes? Well, let's say that Donald Trump makes $1 million from something during the year. So his investments bring in $100,000 or $1 million. Something brings in $1 million. There's some $1 million thing hitting his tax return. And he says, well, I don't want to pay taxes on $1 million. What can I do? Well, he can go out and he can buy a commercial property for, let's say it's a $3 million property. He can go buy a $3 million property. He can finance the entire purchase. So he has zero money out of pocket. He finances the entire purchase, gets debt for it. He can then do a special thing in the tax code called a cost segregation study. A cost segregation study breaks out the components of that building and generally gives, say, like a 30% deduction based on the value of that. So if he buys a $3 million property, that's going to generate a $1 million deduction. So now he owns a property, $3 million property. He's generated $1 million deduction. Since he's a real estate professional, that $1 million deduction can offset the ordinary income on his return. And now he gets to zero net income and pay zero tax without having to take any money out of his pocket. So you too can have that Trump tax plan. If you are a real estate professional, if you spend the majority of your time, over half of your time in real estate trades or businesses, then you can claim that for you. And let's go through some of those. So we're talking about property development would qualify, property construction or renovation, property acquisition, property management, real estate brokerage, or rental property operations if you materially participate. Those are some examples of those, that there's more detailed ones that we can get into. But yeah, that's what would qualify there. So that's what makes kind of Trump and a real estate professional status so great, so alluring, is that it gives you that opportunity to get losses on your returns without actually even having to come up with money to get those losses. So if you want more tax updates, go to taxtutor.com and subscribe to our weekly newsletter.